The row over GST on gaming companies continues. We learn from sources that the Finance Ministry is unlikely to consider a review of the GST Council's decision to tax real money games at 28%.
Just yesterday, the Minister of State for IT, Rajiv Chandrasekhar, said that they will approach the GST Council to reconsider the 28% tax on online gaming once a sustainable regulatory framework is established for the industry. This comes amidst a backlash from the industry over the 28% tax rate.
Pharmeasy's parent company agrees to raise more than 2,000 crore rupees after a hefty cut to its valuation. Sources say Manipal Group will bridge any potential shortfall if all investors do not participate in the rights issue. That's an exclusive.
EdTech unicorn Eruditus turns profitable in the April to June quarter. Startup says that higher gross margins and global revenues led to better operating leverage. Targets an EBITDA of $40 million in FY24.
Insurtech startup Renewbuy raises $40 million from Japanese insurance major Dai-ichi Life Holdings. This round is part of its ongoing Series D round, expected to close soon. This partnership will allow the startup to access growth opportunities in the Asian market.
Analytics startup Factors.ai raises $3.6 million in a pre-Series A round. Fundraise was led by Stellaris Venture Partners with participation from existing investors, Elevation Capital and Emergent Ventures. Will use fresh funds to strengthen go-to-market teams and for product development.
Walt Disney has approached a state court in India in an ongoing legal challenge against Google's in-app billing system. As per Reuters, in May, India's competition watchdog started an inquiry into Google after some companies alleged the service fee charged by the firm for in-app payments breached an earlier antitrust directive.
Those were the headlines that we're tracking for you this evening. The top story today, the row over 28% GST on real money gaming continues. We learn from sources that the Finance Ministry is unlikely to consider a review of the GST taxation of 28% on real money games. Sources say that the GST Council unanimously agreed on the 28% GST rate for real money games. There is no proposal for a review.
And staying with that debate over GST on online real money gaming, the Minister of State for IT, Rajiv Chandrasekhar, has said that they will approach the GST Council to reconsider the 28% tax on this. Speaking at CNN News 18's Town Hall, he said that this would happen once a sustainable regulatory framework is established for the industry. Ashmit Kumar has been tracking the story and joins in with the latest on this. Ashmit.
Well, a couple of aspects here. As you correctly pointed out, sources are beginning to tell us that there is a very clear view developing within the Finance Ministry that there is no going back, there is no U-turn, there is no need for a review of this 28% GST levy. In fact, the rationale that we're getting from the North Bloc is that the GST decision was a collective decision, that there were concerns expressed by various states on the negative effect, and that there was consensus built within that GST Council meeting that there is a need for this 28% levy, which is tantamount to a sin good, because of the concerns that had been raised. And as of right now, there is no proposal for a review of that 28% levy on online gaming. Now, having said that, let's also, in fact, bring into focus what the Minister of State for Ministry of Electronics and IT, Rajiv Chandrasekhar, had to say. He spoke at a town hall last evening, clarified this morning by way of Twitter, but he has made his position clear. He has clarified that the regulatory framework around permissible online gaming is currently in its nascent stage. It is evolving. The view that he's seeking to put across is that once this regulatory framework develops, once it helps crystallizes what qualifies as permissible online gaming, at that stage in the future, without commenting on when that stage would arrive, but nonetheless saying that at that stage is when he, as a Ministry of Electronics and IT, would take this new framework and would communicate it to the GST Council, hoping for a decision there. So that's the version coming in from the Minister of State here, that at some point when this regulatory framework develops, perhaps that is when the GST Council will be briefed about this new framework. But as of right now, the word from North Bloc is quite clear. No scope of a U-turn, no scope of a review of this 28% levy.
The process of creating a regulatory framework for online gaming is only started in January of 2023. And we are only in the early stages, nascent stages of creating a predictable, sustainable, permissible online gaming framework. And so we will do that, and we will go back to the GST Council and maybe request their consideration on the facts of the new regulatory framework.
Moving on to a CNBC-TV18 exclusive, API Holdings, the parent of Pharmeasy, has agreed to raise 2,000 to 3,000 crore rupees via a rights issue to repay its debt to Goldman Sachs. We learned from sources that the company's board has approved Manipal Group's offer to invest a shortfall amount if investors do not end up participating. Nisha Podar joins us now with more. Nisha, what are you picking up from your sources?
In a final effort for the survival and saving of API Holdings, the parent company of Pharmeasy, late night on Monday, we gathered that all the investors of Pharmeasy, along with the founders, had met to build a consensus and a solution. So the final outcome of that is that the 2,000 to 3,000 odd crore rupees will be the rights issue amount for Pharmeasy, and all the investors can, on a pro rata basis, subscribe to this rights issue for fund infusion to the company at a very low valuation of at par or face value share price. And then the shortfall in the rights issue is something that can be mitigated with Manipal Group Family Office's offer that is already approved by the board of API Holdings. But remember, a section of the existing shareholders and investors of Pharmeasy had raised concerns about getting hugely diluted because of the low valuation at which Manipal Group is likely to infuse funds, and therefore the company has come up with a solution to first give the right to the existing shareholders, and if there is any quota which is unsubscribed, that shortfall can be filled up by Manipal Group, because the company clearly needs cash at this point, and at least 2,500 odd crore rupees to repay debt to Goldman Sachs, to which it has pledged, remember, as collateral shares in group companies, especially of listed company Thyrocare. So that fund infusion plan is there. Of course, the exact amount of rights issue will be decided in the next few days, we gather. And also remember that this fundraising will be at a huge valuation drop from the current valuation of the company of $2.8 billion. So depending on 2,000 or 3,000 crores being raised, it could be post-money valuation could be 6,000 to 7,000 crore rupees.
The strategic involvement and M&A and strategic investors partnering with financial investors is a theme that we've seen often repeated in the world. And I think it's an important, it's a good thing, actually, the marriage of that, because it brings different disciplines together.
That's right. And but otherwise, on online pharmacy, your view remains bullish, Ravi?
I think we are bullish on the broader healthcare sector, and pharmacy is part of that sector.
Well, we'll be tracking that fundraise very closely here on Startup Street. Now, moving on, fintech unicorn Razorpay recently announced the launch of its first international payment gateway for the Malaysian market with Kerlek, which is now known as Kerlek by Razorpay. The company had acquired the Kuala Lumpur-based recurring payment startup Kerlek in 2022, and its full-stack payment product is now going live. It is targeting over $2 billion in annualized transaction value by 2025 by serving more than 5,000 businesses. Joining me to talk about this is Razorpay's co-founder and CEO, Harshal Mathur. Harshal, welcome to Startup Street. Thank you for your time here. With Kerlek, Razorpay launched its first ever international payment gateway. So tell us, what is the size of the opportunity you saw in the Malaysian market, and how are you using your India learnings to really expand your presence there?
Okay, thanks so much for inviting. I believe as we started building in India, we've always been looking at how can we take the products and services that we develop in India to other markets. Given that India is one of the leading markets for fintech revolution, some of the products that we have built here are truly world-class. And I think, and we're glad that we finally found the opportunity to take some of those world-class products in other markets, starting with Malaysia. Looking at Malaysia, it's a very high growth market. The size of the digital economy in Malaysia is about $21 billion, is expected to double up to almost $50 billion by next year. So there's a large opportunity pool there, and the market is growing very rapidly. And I think a lot of our learnings that we have had in India of building world-class products, in building for ecosystems which have real-time payments, and those can be very well applied to the South Asian market, Malaysia in particular, simply because a lot of these markets are replicating the kind of changes that we saw in India in the last couple of years. A lot of these markets are launching their own versions of real-time payments similar to UPI. They are constantly adopting digital payments in various different sectors which are adopting the newer technologies. And I believe that can create a lot of wide scope for Razorpay to bring the products and services that are scaled well in India to these markets, and that's what we are hoping to do with this launch.
But Harshal, quickly, what is Curlex's current share in the digital payment landscape that you outlined in Malaysia?
Yeah, so it was a very early small acquisition that we did about 12 months back. The primary reason for doing that acquisition was to get the right team and the right product that we can scale it up. So right now, it has about close to 500, 600 merchants, but we expect to scale it up to almost 5,000 merchants by next year. I think that's going to be the big exponential scale up that we want to see in the next 1 to 1.5 years.
All right, so 5,000 merchants, and you're also targeting $2 billion in annualized transaction values in just the next couple of years, right? Tell us how you plan to go about that, given that currently the size is much smaller. Are you looking at more inorganic opportunities as well?
No, see, we have the right team, we have the right products. We are bringing a lot of products and learnings from India into these markets. We have an office in Kuala Lumpur now, which is building for the local markets, and I think we have all the right ingredients. And with all of that, given the pace at which the market is growing, we are fairly confident that we can take up that much share out of that market and bring it on the Razorpay platform, just on the back of the products that we have. And I think this launch is just the starting point. We are already seeing a lot of traction, a lot of inbound interest from the merchants and businesses in Malaysia. In fact, a lot of startups from India have also expanded to Malaysia. So there's a lot of cross-learning and learning from India that we're able to carry into that market. So with that, I think we have the right ingredients to scale it up to almost 2 billion plus of transaction volume in the next 2 years.
Harshal, I'm going to pick on your words. You said this is just the start of your international play, right? So I want to understand, outside of Malaysia, whether it's in the Asia region or overseas, what are your plans? Are you going to be launching your payment gateway in other countries, and how soon are you looking to do that?
Yeah, we are very clear that the product and services that we build in India are truly world-class, and we are very confident that a lot of products that we have built in India in Razorpay are truly world-class. It can be taken to a lot of these markets. So Malaysia is a starting point, but you're right. Like, there are a lot of other markets in Southeast Asia in particular that we are fairly excited about. I think Indonesia, Vietnam, Thailand, Philippines, a lot of these markets are seeing very rapid growth. The kind of digitalization and digital economic growth that we saw in India in the last 5 to 10 years, a lot of that is coming into these markets as well. And we would like to carry our product and our experience to these markets and scale up there. So those should be some of the next markets we'll start looking at. I can't give specific timelines because payments is a complicated domain. We need licenses, we need bank partnerships, we need approvals and multiple other things to fall in place. But we are very confident that Malaysia is a starting point, but we want to expand at least to the broader Southeast Asian market and then other markets outside that.
All right, we'll wait for that to happen. But Harshal, just a quick word before we let you go. Your annual revenue last reported almost 1,500 crores and profits of 7.3 crores. And your gross transaction values have crossed now $100 billion. So give us a sense of what your international play is going to be like. How much, revenue is going to accrue from that business, say, not immediately, of course, you've just started there, but in the medium term.
Yeah, so see, payments and fintech is a very deep domain. So we are in there for the long term. As I said, that we need to do a lot of groundwork to launch in any one market and then to scale it up. So we are not impatient about it. We feel that we need to give any market at least 3 to 4 years to mature before it can start contributing significantly to our core revenue base. But you can see that like almost $100 billion of payment volume is what we process through in India today. We're expecting about $2 to $3 billion to come from Malaysian market in the next 2 years. And I think if you add a lot of these markets together, they can together contribute to almost $8 to $10 billion, which is not small compared to the size of these markets versus the size of India. So from that perspective, I believe close to 5 to 10% of our volumes and consequently our revenue could start coming from international markets in the next 2 to 3 years.
All right, so $2 to $3 billion immediately in the next couple of years, then 10% over a period of time. Harshal, always a pleasure speaking with you. Thank you very much for your time here.
Thank you so much.
On that note, it is time for us to head into a short break. But coming up, Smartstaff backed $6.2 million in a Series A round. How does the startup plan to use the funds and what are the growth plans? We find out on the other side. Stay tuned. Welcome back. You're still with us on Startup Street. Bengaluru-based blue-collar staffing platform Smartstaff has raised $6.2 million in a Series A funding round from Nexus Ventures, Arkham Ventures, Bloom Ventures and Ulterior Capital. The Series A funding round takes Smartstaff total funding raised to $10.5 million. Founded in 2021, the startup offers payroll and compliance services. Joining us now to discuss this further is Arpit Dave, the co-founder of Smartstaff. Arpit, thank you so much for joining us on Startup Street today. You essentially offer end-to-end solutions for recruitment, workforce management and retention for mid-sized and large manufacturing enterprises. So how are you using tech to simplify this process, and what's the role that AI can play here now?
So at Smartstaff, we basically are taking the age-old staffing industry that existed in manufacturing space of India for maybe last 50, 60 years, and we are changing it into a very Uber, Ola-like platform where a factory worker can do everything from discovering a job to keeping a track of their date, keeping a track of their earning, as well as get access to a lot of benefits which only a white-collar employee gets in current scenario. In part of that, it basically makes the job of technology quite complicated, because if you look at this industry basically operates at a level where there are about millions of contractors in India which provide employment to 40, 50 workers each. And workers keep switching jobs on a weekly, monthly basis, depending on the requirement that they have with businesses. What we as Smartstaff are able to do is we basically are able to bridge all the demand that exists on manufacturer side. So we connect multiple manufacturers, get an understanding of what demand they have across different skill sets, standardize that, do the same thing with workers where we do a skill test, identify skill sets that they have.
Right.
And then on a running basis, we basically match them with that. And that is the part where a lot of machine learning and AI comes into the picture.
Right. So basically like an Uber and Ola for staffing for blue-collar workers, essentially. Exactly. But talk to us about the different segments that you cater to. Where's most of the demand coming from for you? Any new industries that you're looking at entering into? Tell us a little bit about the clients you're catering to.
So currently we cater to, within manufacturing, 3 industries. So the first industry which we cater to, with which we started, is textile manufacturing. So within the textile manufacturing, we work with manufacturers of a lot of domestic brands, as well as a lot of manufacturers which cater to international brands. These are like all manufacturers operating factories of 1,000 to 2,000 workers, in some cases even 150 workers as part of their shop floor. With respect to other categories, I think textile is about 70% of our business right now. That's where we started, and our seed was to basically prove out the model. In the coming year, we are targeting to get into auto components as a second industry, warehousing as an industry, and then electronics assembly is also an industry which we need to get into.
All right. So auto components also something you're looking at. Now, apart from expanding into newer segments, which you've just outlined for us, where will the rest of the money go? Upskilling is one of it. What about geographic expansion? As we understand, South India happens to be your core market right now. So looking beyond that as well?
Yeah, so we right now are present in like 3 cities in southern India. So we have a presence in Bangalore, Tirupur and Hyderabad. We're looking to expand into Delhi NCR as the immediate next geography. We started small pilots there last month, and we are looking at expanding that further. And then I think within the next 12 months, we'll be getting into Gujarat and Maharashtra as 2 more geographies. All
right. So Delhi NCR is where you'll start your expansion from. But let's talk numbers then. What about revenues? Where are you at? What are your targets? How's profitability looking? Give us a sense of the revenue roadmap over the next few quarters.
So currently, we charge businesses for every hour of work that our workers do. We currently fulfill about 300,000 hours of work every month. So that's basically the key monetization strategy that sits with us. For every hour, it depends on the skill set of the worker, but on an average, we end up charging about $1 to businesses. In terms of our growth, we currently are growing at about 25 to 30% on a monthly basis. I think within next 12 months, we are targeting to get to about from $300,000 today to get to about $1.5 to $1.6 million on a monthly basis.
All right. So you're growing at 25 to 30% on a monthly basis. Now, you compete with the likes of Karma Life, Work India, Better Place, Apna, and Perk Finance across their verticals. So how do you plan to stay ahead of competition? Also, has this space matured over the last few years?
So we kind of are like a one-stop solution for a worker. So like just try to think of this industry like 70% of blue-collar workers in India currently migrate from somewhere like a UP or a West Bengal to a different part of India in search of a job. And once they migrate, then they need everything from a place to stay, to work, to work across different factories. And at Smartstaff, we basically provide a single set solution for them. And that's kind of how we differentiate compared to all the other companies that you talked about. In terms of our proposition, it's very simple. We think that as a blue-collar worker, you are always looking for a consistent, standardized earning opportunity, as well as get access to benefits, which is in a formal ecosystem. And that is something which does not exist in the 99% of the market which currently operates. And we basically are looking at building out a presence in that space.
All right, Arpit. So one-stop solution for blue-collar workers. Thank you so much for joining us on Startup Street today.
Thank you so much. Thanks for having me.
All right. Now, moving on to another conversation we had. We continue to be very excited about India. That's the word coming in from Nicholas Brathwaite of Celesta Capital. Speaking to Shireen Bhan exclusively earlier, Srinam Vishwanathan of Celesta Capital added that India is moving towards deep technology focused on semiconductors, but needs policies to gather investment. Here's a slice of that conversation.
Well, we continue to be very excited about India, and it's good to see we're not the only ones that are excited. Lots of other people seem to be coming in and focusing on the opportunities in India. And, you know, the Idea Forge story, along with our first exit there, which was a company called Aura Semiconductor, exemplify the opportunities that we see in India.
You know, you talked about Idea Forge, and it has, of course, got the clearance now as far as its IPO is concerned. But the larger drone story in India, and this is being pegged as one of the opportunities that the Indian government is pushing. We've seen a production-linked incentive scheme being launched by the government specifically for the drone space. It's a small one, but nevertheless, it's on the table. What do you make of the strength of the India drone opportunity today?
Well, we think it's very strong. When we made the investment in Idea Forge 6 years ago, we had looked at several drone companies in North America and other geographies, and we did not make any of those investments. But when we looked at Idea Forge, we felt that the opportunity here was the fact that the Indian requirements were very different from everywhere else. You look at the Indian terrain and some of the other challenges that you face in India. We thought that the successful drone company in India would have to be a local company that understood the Indian dynamics.
Well, speaking of the unique dynamics of the India opportunity, Sriram, let's talk about the other big opportunity that is being put on the table, and that is the semiconductor opportunity. And, you know, you talked about your first India investment, which happened to be in a firm, in a fabulous design firm, and then exit as well. How are you reading this? You're also a member of the ISM, the government set up a board that's going to be looking at semiconductor investments in India. How do you read this opportunity today?
The timing of the Indian government's focus in semiconductor, not just in the factories or the fabs for manufacturing, but also in the fabless area, is profoundly significant, especially if you take into account sort of the global sort of geopolitical issues that we're all faced with in terms of supply chain, in terms of, you know, new sort of applications in the generative AI space. All of these areas bode very well for the Indian opportunity and the Indian ecosystem. And we see tremendous number of companies that are actually leveraging that. And we're glad to be part of, you know, backing, you know, many of them. And we hope to be doing a lot more of that.
Mm-hmm. You know, specifically the India-US partnership, there is an MOU now for the semiconductor space. But there's also a large program that the US is rolling out, you know, to try and get chips manufactured here in the US, courtesy the CHIPS Act, which is a significant incentive program. What are the potential areas of partnership that you believe both sides need to focus on as we move forward?
Rightfully so, the U.S. government, you know, was able to pass the CHIPS Act, and I see that sort of happening in every geography, and I think India also will probably have to attract more people to actually start new companies in the fabless area. And there's tremendous talent, as I mentioned, and there are lots of investors, you know, including Celesta, that are actually looking at that and saying, how do we actually help create that ecosystem to the actual benefit of the local markets? And increasingly, those companies actually are able to build products for broader use. And it's good for everybody. It just sort of broadens the available pie for everybody and, you know, protects the domestic objectives as well.
And with that, it is a wrap on this edition of Startup Street. More news and updates continue on the other side. Stay tuned.